Hello everybody, my name is Alesh Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. Now I normally don't comment on current events, but at the request of one of my subscribers and friends, I decided to talk about the Reddit-initiated increases in prices of GameStop, BlackBerry, Nokia, and others to counter short seller hedge fund investment companies. Just so we all know what shorting is. When you expect a share price of a stock to go down, you borrow the shares, which you don't have, so you are short, hence the name, and you borrow the shares from your brokerage or some other means, and you immediately sell the shares. You need to return them by a certain date, and so you need to buy them at a cheaper price, with the profit being the price at which you sold them less the price you bought them back for. Some companies that short stocks have, hopefully real, information about the company that, when released, will be seen as negative and lower the price. This could be information from a disgruntled former employee, for example. The stock is supposed to go down, allowing the short seller to make money. If the stock goes up, the short seller has to buy it at that high price, losing money. If this is done on purpose, it's called a short squeeze. Money can be made in the stock market whether the stock price is going down or up, even though the overall market trends up, so short sellers may have a tougher time of it than those that go long, which is what buying stock and expecting it to go up means. And that's the opposite of a short. So what happened in the last week of January 2021 was that on Reddit, a group of people started posting about the short sellers and decided to fight them by buying the stocks that they were shorting to drive the price up as a social action against the Wall Street fat cats. Since a lot of people have trading accounts and the ability to borrow money through their margin account, and social justice is the thing to do, they started buying these stocks. And they encourage each other by slogans like "Hold the line," which I'm pretty sure is an old Toto song. And GameStop became a Fortune 500 company for a couple of days, with apparently Big Bird sitting on the board. That is a real meme about this. I think there's definite elements of pump and dump in this, where people buy a stock, they pump it up by advertising it and putting it out on social media, and then when the price goes up, they dump it. This has been done before and will be done again. It just energized a large group of people to invest in a completely random stock of a random company whose time had come and gone. I'm not sure why it worked better this time than normally, perhaps because of the social activism aspect. And then the buying spread to other companies. I'm not sure if it started as people truthfully wanting to quote unquote fight the man, but as the price started going up, it became about making money. Don't mistake it for anything else. With people who already bought in, encouraging others to buy in so the previous buyers would make more money. I don't believe in social causes in the stock market. Go to work at a soup kitchen if you want to help your fellow man. Go buy stocks if you want to make money. This has been an example of the greater fool theory, as you can look up in Wikipedia. So, what was my point again? Oh, yeah, there's nothing about fighting the big short seller hedge funds in this. Probably not at the start, and certainly not in the middle, nor at the end. No Robin Hood, no pun intended, taking from the rich and giving to the poor. In case you didn't get the pun, Robinhood was the brokerage in the US that stopped trading on the affected companies and is now getting sued. So that was my soapbox tirade. Personally, I sold one of the affected companies, BlackBerry, the Canadian former smartphone stock, on January 27th. BlackBerry was also chosen by someone for social activism and or to make money off of, which sort of puzzles me because at any time there are far more stocks being shorted than just the half dozen that were affected. So I am assuming somebody had bought BlackBerry shares already and then decided to pump them up for a quick profit. I held BlackBerry for literally 10 years, since the good old days. And last week I made my money back, selling it for $33.97 Canadian with completely accidental perfect timing. And with the money that I made, I bought Algonquin, AQN. Not that I'm advocating it, but it is a renewable energy producer and a utility that pays a 4% dividend. Dead money for the last 10 years, pumped up by social media for a quick exponential rise, sold to get something that makes a profit quarter after quarter and pays a dividend. I didn't even care if BlackBerry had kept going up, which it didn't. It now sits at less than 15 per share, and I'm sure it's on its way back down to where it started the tumultuous few weeks, probably around $8 or $10 a share. In these situations, people jump on the bandwagon just because the stock is going up. The rise has to come from somewhere, and the last one to buy is left holding the bag. And it's always the retail investors. It's never the smart money. If you can time things well, you can make a bunch of money. If you actually want to hold the stock, think about what the stock's true intrinsic value is and why it is going up. The party eventually ends in these situations. Speaking of which, I also own Nokia, another stock that got picked for the frenzy. I've held it for a couple of years as a 5G network play. I didn't discover, unfortunately, that it had doubled from $4 to $5 per share to close to 10, and by the time I noticed, it was down to the appropriate $4 to $5 price. And that's why you should limit the number of stocks you have. And what happened at the end? Well, as I write this on February 2nd, GameStop has lost a bunch of value, down 60% in one day today, and is well on its way back to its old value. BlackBerry is also on its way down, as I had mentioned, and Nokia is already down to where it started from. A bunch of people encouraged others to buy, and they got rich themselves. And there was only a limited time that the Reddit investors were going to sit on this money anyways. Since there were no other investors who wanted the stock for non-social justice reasons, and as righteousness turns to greed and people start selling, no one wants to buy the stock at the high price, since that price is completely artificial and the stock drops like a rock. Like I said, 60% in one day for GameStop. And so it did drop, or at least it continues to. So what did we learn from all of this? Well, don't jump on fads and strange occurrences if you're a long-term investor. Stocks go back to their fair valuation sooner or later, determined by their profits. If you're a trader and you set a stop loss limit to keep the risk in control, have at it and make some money. A trailing stop of 10 or 20% below the top might be appropriate in these situations. So if you have any requests on what you'd like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.